First and foremost, we have to talk once again about Robinhood. Now, let me tell you, I would be vomiting every single time I spout the name of this filthy company, but some very interesting developments have happened that you need to know of. In yesterday's video, we talked about how Robinhood was fined $70 million for its negligence and trickery that took place in 2020. Today, however, the company announced that it would be partnering up with Nasdaq to get an initial public offering. It stated that it will go public under the symbol HOOD. Yes, I had to restart myself twice to make sure I was reading this right. The entire market continues to be a meme in 2021 and we officially live in a dystopia. Now, Vice News dropped a pretty big article today bringing a lot of spotlight and previously unknown information regarding the investigation that is ongoing in relation to January 2021 and how Robinhood decided to restrict its users from being able to buy meme stocks, elongating the restriction longer than any other broker. Apparently, the ongoing investigation had the feds seizing Robinhood CEO's phone. Robinhood is currently subject to at least 49 class action lawsuits, something that will for sure further damage and taint the reputation of the worst broker for years to come. I still get this question a lot, and in my opinion, if you have your AMC or GME shares on Robinhood, you are gambling. The company continues to have problems, and has restricted even the ability to sell for customers when the price of certain securities or even crypto have skyrocketed. Yes, you should open an account with another broker that doesn't play with your money like this. Also, Trading 212 broker has also been acting really strange, engaging in very anti-customer policies, and you should try to stay clear from them if you live in the United Kingdom and plan on opening a trading account. Now, let's talk bonds, and I don't mean James Bond. I am talking about AMC bonds and how hedge funds are using it to dip the price of AMC. Now, it is no question that AMC had a crazy huge run, and the fact that it is consolidating at prices so high, right now in the 50s, is an absolute nightmare for hedge funds. They pump the stock in order to gain funds and know that people would dump it. However, as is the psychopathic nature of Wall Street, lessons were not learned. Instead, after the rise of AMC, the vast majority of people did not sell anything. They simply kept holding to what they had and have slowly been scooping up extra shares as they can. Much to the delight of the apes, due to their collective agreement and resolve to not sell a single share until the squeeze, the AMC price has consolidated super high, and this has presented hedge funds with another nightmare scenario. Now, we have often talked about naked shortings and the other various means by which hedge funds use to defeat the price of AMC. Well, it appears that we have found a new way hedge funds have been secretly using to dip AMC, but the good news is that AMC seems to have taken action against it. Hedge funds are taking long positions in bonds, which grants them the ability to be able to keep shorting the stocks further and further. By having collateral through the bonds, they have obtained the ability to exert downward pressure into AMC, which is why I think the stock has struggled to maintain a position of consolidation above the $60 price in the past 2 weeks. In conjunction to this, we have seen through some numbers that they might also be selling AMC below the bid price in dark pools, as a means of desperation to prevent AMC from bouncing up. So, through the purchase of these bond notes in addition to all them naked shorts, these clowns took out around 200 million AMC shares to short them through bonds. Funny enough, most of this bond scheme has been dated to commence around the beginning of June, which shows that hedge funds are getting really desperate for anything to grasp. So, you look at this information and you think, what can be done? Well, it appears that AMC is already on it, because you remember how they requested a withdrawal from the Form S-3 a couple days back. Once they get this approved, this whole bond shorting should end, which would be another huge step that will allow AMC to consolidate upwards once again and be able to move with a little bit more freedom. It was through this direct filing for withdrawal of S-3 that we were able to learn about this bond shorting problem. The vast resourcefulness of this ape community knows no bounds, and I am so incredibly proud and humbled by the hard diligence and work by everyone. Thank you to all that found this bond issue. We own the float for AMC, and we will have our tendies. These hedge funds will fight tooth and nail, but the outcome has already been chosen, and we will have our squeeze. I was going to make a bigger segment for GME and the supply and demand, but I figured it would kind of get lost because it would imply giving a huge lesson into economic theory and make this daily update video impossible to get out to you in time, so I will just summarize the key points. Remember that big video I did on regulation NMS, which birthed alternative trading systems, otherwise known as dark pools. We talked about much of the consequences and effects this regulation has had on the market and how the benefits reaped were overshadowed by the blatant manipulation that it allowed to be done. Because this regulation increased computer trading, it also allowed for a lot of disruptive trading to take place, where billions of dollars worth of trades are executed and then immediately cancelled for the sake of price manipulation. This causes the dissemination of false information in markets, creating a false sense of supply and demand for securities like GameStop. One of the things that many people keep asking is why hasn't the squeeze happened yet? The real answer to this lies in time. For as long as hedge funds are allowed to create an artificial price through implementation of naked shares in particular, which serves as the supply, it can cope with the demand. There is a reason why GME isn't allowed to be too volatile, and that is because the moment where the artificial supply portion of the stock does not meet the demand, the entire function, or balance, of the supply and demand scale tilts over. Hedge funds lose the ability to provide supply to create downward pressure and the stock starts rising in vertical fashions, which is the biggest nightmare for hedge funds. I know this was a very short and to the point answer, which is very unusual of my videos as I like to extrapolate and talk things through a little bit more, but I am short in time. I will see about making a video on this if there is enough interest though. Today's reverse repo operations submitted by the Fed amounted to $742 billion. A decrease from the almost $1 trillion in operations from yesterday, but it is still a very high number. Dark pool trading for GME accounted for 44% of the total volume while dark pool trading for AMC accounted for 59% of the total volume today. AMC traded bullishly on pre-market, as predicted yesterday. The stock reached over 57.40 in the pre-market, marking that the momentum from yesterday's close was still lingering. Upon market opening, the stock moved up, reaching over 57.60 before being plummeted with attacks. The stock managed to consolidate for a while on the VWAP line before being attacked and falling down to 54. The stock was trying to consolidate it before being beaten back down to 52.53. Then it had a bounce up and close at 54.22. It ended below the VWAP, and it shows that hedge funds want this stock to be below $50 to not have as many options expire in the money as possible. The stock was just attacked throughout the entire day today and tomorrow we will be battling to finish above $50. GameStop traded incredibly similar to AMC, having a small surge close to its opening before being dipped and not allowed to consolidate for a long time throughout the day. The stock will test $200 tomorrow as hedge funds will want to defeat that price for the sake of having less options expire in the money. The stock ended the day at 204.36, well below the VWAP. To be honest, I am very bullish around this price action, as it means I could purchase a couple of shares at a magnificent discount. And with that, I want to thank you for making it to the end of the video. Please drop a like if you found it useful and please remember to comment. Remember that we can no longer sit on the sidelines and let hedge fund bots take over our community. Let me know if you liked the video, if you found it clear and insightful, and if you were excited and plan on buying more AMC or will hold to see what happens. Thank my Patreons, because without them this channel wouldn't be possible. I know not everybody can pledge support and instead opt for a one-time donation and it is equally appreciated, so thank you all to the moon for your kindness. Also remember that if my name isn't highlighted in the comments, then it isn't me. Lots of bots are pretending to be me, so be careful. Either way, thank you for being here. Let me know if you liked the video and found it useful and I hope to see you guys tomorrow on the next one.